Welcome back to the channel, Crypto Trend Trader with the evening market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I'm sure you noticed that I am taking a little vacation, but I did just want to do a quick update. We see quite a bit of volatility in the markets. Basically saw obviously a big sell-off in crypto. Primarily got bought right back up, but we saw some serious liquidity events. Bitcoin was down about 20%, ended up closing, much higher up than that. But now we're seeing that follow through coming in. I sort of wish I would have done an update ahead of time. But, hindsight's 2020. I had talked about how it looked like we were topping out here. But essentially, we've been operating inside this yellow channel right here, the green line being that heart line. And, this was starting to look like real toppy up here. We were putting in a lot of divergence on different time frames. Different oscillator indicators, and we just couldn't get back above like that halfway point, anywhere near the top of the channel again. And this red arrow right here is basically just that measured move. It's essentially like top to bottom of the channel, and we basically broke out of the channel and got that measured move instantly. Sold straight off right down to like basically exactly, depending on what exchange you're looking at, it was like 46,000. Little more volatility on Kraken, a little less on Coinbase, like any typical move. But we basically got that measure move instantly, and now we're consolidating still on top of this orange support, and that orange support was all the way at the bottom there, had like a couple substantial touches and candle closes, and we basically got picked back up, tried to retest the breakdown, couldn't get back above it, and then dump down, and now we're sitting right on that level. We always talk about it, but we've been in a long trending uptrade for quite some time now. I was expecting us to get up a little bit higher to like that 62,000 range, but now it's time to really pay attention to, is this just a small correction, inside of a macro uptrend, or is this potentially like the trend topping out? And what I like to look for is like a change in trend, change in market behavior, etc. So when I see a big dump come in like that, a violent sell-off, it makes me think that there's potentially like something going on here. So if we turn on our moving averages, we can see something key important happen right here. We sold down to the 21. This is on the 4-hour. Came down to it, found some support. But then when we broke down below it, we now crossed that 821 to the downside. We're finding support currently, but we came all the way back up to try to prevent that cross from happening and got rejected. So from when that got rejected, selling off, this starts looking bearish now. Now, granted, this is only the 4-hour time frame. We did get the hard sell coming out of the bullish control zone. We did get, multiple histograms coming down here. We got the cross below the slope line, flipped it over red. A lot of potentially bearish signs, but still could just be a correction. We did come all the way down to the 21. We closed technically like yesterday above the 8, so we have to see where this one closes here. But if this closes below the 8, it's going to definitely just come right back down to the 21. And like a lot of times, you'll see a big wick come down like this, and then gets bought back up bullishly, and then it just sells back off again. So I don't think this move is necessarily over. The key to pay attention to is, do we take out this previous low? Do we consolidate here and then get a move back up? But off that initial dump last time this happened, we got bought back up, sold back down again, got bought back up, came back up and put in a lower high. So we could literally get all the way back up to like 55,000 after selling off like down below 45,000, and it's not unrealistic. So I think right now, there's like basically like a $10,000 zone that we could operate inside of. We could even come down here lower and touch like the 50, 55, similar to what happened when we consolidated back here. And all that would be is like retesting the previous breakout, which that last high was like right around like a little over 40,000. So it's not unrealistic to think we come down here, touch that 40,000 range, over time. This was quite a bit of a sell-off right there. If you saw Ethereum today, you know, got quite a bit of volatility as well. Kraken, especially on Kraken, Ethereum sold off down to like $725. It was like a flash crash, full on, like 60+% dump. Polkadot was like the same way. Saw a massive move down. It was like over 60% dump. Really just shows you that you know, these books are thin in both directions. So if there's not a bunch of money in the books holding price up, when we see a, you know, stop run like that, you know, prices can dump down real low real quick. So you know, I think a lot of people are new to the markets. A lot of people have been in the markets for a while but gotten a little complacent. Definitely not time to be overly carefree in these markets. Definitely time to be protecting any gains you made, any positions you have, any crypto you own. Because people were the same way at 20,000, thinking that we were going to the moon. Everybody was talking about 50,000, and now here we are at 50,000. Everybody's talking about 250,000. You don't want to be one of those people who gets stuck holding the bag for 2-3 years. Could have took profits on a massive position and just said, well, I'll just wait for it to bounce one more time. It's going higher, it's going higher. And then you get stuck. So it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. You know, I'm not telling you what to do. I'm telling you what I do. But there's definitely some bearish signs starting to show up in these markets, at least for a similar situation like this where we get a nice, you know, corrective consolidation for a little bit. But we're starting to see quite a bit of weakness in traditional markets. Tesla is already down 20% from its high. You know, most indexes put in a series of lower highs over the last few days. You know, treasury yields, we're seeing it up at, I think it hit like 1.37 today. 1.5 is a key level to look out for. You know, and just to touch base on that also, I talk about the treasury all the time, but now everyone's talking about it. I'm not hearing people talk about why 1.5 is so important. I know people say like, oh, that's what it was last year. 1.5 is a key level. But I don't hear people actually explaining why it's a key level. So if you're not familiar with why, the issue right now is that there's no money in safe bets. So you have to take risky bets. So when the yields are so low like that, you have to move into risky things like stocks. Bonds are no longer functional in the same way. So you have to move out of the safe stuff like treasuries, like bonds, like all that stuff. And then you have to move into the more risky stuff like stocks and you know whatnot. And cryptos, whatever, to try to beat inflation, to try to beat, you know, the markets. The reason 1.5 is so important is the S&P index pays a 1.5% dividend. So that's what you basically compare it to. If you're going to choose between being in the S&P into a stock index and make 1.5 dividend versus a 1.5, you know, bond treasury yield, 1.5% 10-year, you know, most people are going to take the safe bet. You know, take the I mean, I don't want to say guaranteed money, but you know, the treasuries are essentially the safe bet. So that's the difference. That's the main difference is the S&P is a little more risky. So if they're paying the same, you're probably just going to take the less risky one. At least most people are. So that's why 1.5 is such a key level. You know, we're getting there fast. It looks like we've broken out of that channel. We're holding at the top. Could get a rejection still, but definitely worth paying attention to. Pay attention to oil prices. You know, I mean, they're going to continue to rise. We have all kinds of like oil production shut down, extra consumption because of the winter, everything going on in Texas. Pay attention to the dollar. Dollar was selling off, but overall, as long as it puts in a, you know, higher low, still doing fine. So pay attention to Bitcoin dominance, total market cap, all those things. Watch the stock market. You know, this basically move in crypto today was like a premonition of what was about to happen in the stock market. And it was the same way before the big crash back in March. You know, crypto dumped violently right before stock market did. There's also a couple, you know, other factors too. Canada got their first Bitcoin ETF. So now we have a legit exchange traded fund for Bitcoin. We don't have one yet in the United States, but you know, depending on the brokerage, depending on your broker, whatever, you know, a lot of people can get exposure to that even inside the United States, even though it's not technically a United States ETF. So worth paying attention to. Ethereum got its futures. So now we have futures on Ethereum, exchange traded fund on Bitcoin, Canada only. But, you know, things are changing. People ask me, is it different this time? I don't know what you mean by is it different this time. That's such a vague question. You know, we're continuing to make higher highs and higher lows. That's the same as every other 4-year cycle. Is this 4-year cycle going to be different than the previous ones? Is this going to be a super cycle? You know, is it just going to run up to infinity because there's a bunch of like institutional money? No, it doesn't work like that. It never works like that. It's always cycles. It's always going to be a 4-year cycle because that's what the halving, you know, that's the whole purpose of the halving is to create scarcity every 4 years. So, you know, things can change. If we get a supercomputer and all of a sudden, you know, for 2 weeks we mine like exponentially large amount of blocks because it's not taking 10 minutes to mine each block, it's taking 1 minute or 10 seconds or whatever. Things like that can change, like the macro perspective, but, you know, just because there's more money coming in, more institutional money coming in, do I think that that changes the overall cycle? No, I don't. I still don't think that retail is really involved in crypto in the same way that people think it is. It's starting to get out and about a little bit, but, you know, I really think that I really think 2017 was a lot more retail and this is a lot more institution, and we're going to at some point in time see like a marrying of the two where we get a combination of both, but not really. I mean, we're seeing a lot of buying pressure come in. We're seeing almost no selling pressure coming in. But eventually, like any market, like any cycle, you know, it will run out of easy money to the upside, so then it will go for the easy money to the downside. And, you know, that's just part of the cyclical nature of trading. You know, enough people are going to get into this thing at enough of a price and make enough of a profit that finally they just say, you know what, it's going to be easier to move price back down to the downside than it is to move it continue to the upside. And that's when market tops happen. When there's more sellers than buyers, tops happen. When there's more buyers than sellers, bottoms happen. The price is irrelevant. You can use Fibonacci extensions. You can use moving averages. You can use all kinds of tools to determine the trend, to trade with the trend, to make gains in either direction. But the most important thing is to remember, markets are cyclical. They only go up for so long, they only go down for so long, and then eventually they reverse. The most important thing is to recognize when that reverse is happening, lay out the criteria clearly, and then get with the trend, trade with the trend, and of course, protect your principal and take profits along the way. So we'll see what's happening. We've got futures, contracts, you know, options, all that good stuff is expiring. End of the month. Got to pay attention to what's happening here. You can look at the longer time frame on Bitcoin real quick, and you know, depending what happens here, potentially could take out this candle with the bearish engulfing candle. Potentially could save it. We're still up in the bullish control zone. We got the hard sell, but we have not left the bullish control zone. So far, no red histograms right here. No reason to get overly bearish on this. Full on going parabolic. There's no question about that, obviously, but could we continue on for some time? Definitely could. You know, part of the problem with Bitcoin's price right now, though, at 50,000, when you start talking about next target 100,000, that's only a 100% move. People start looking at the risk reward and potential gains and just seeing like that it's not worth it. And I think that's when like the alts become more attractive, which obviously they have been. We're getting that hard sell on the daily. We've got 2 red histograms on the daily. We're over $50,000. I mean, it's not unrealistic to think that we're going to put in a big retracement here, a solid retracement here. You know, I would much rather see a consolidation than just like a single candle dump. But, you know, it's just like what happened back here. Looks very similar to it. You know, we topped out, got like a 20% dump right away, got bought back up, and then continued down to 28%, and then continued down a little more to like 32%. You know, topped out, sold off 20%. Could we sell off another, you know, what, 28% would take us basically back down to the moving average? You know, not unrealistic to think we're going to come back down to like that high 30s, low 40s. So, there you have it. Just a quick little update. I hope you guys are enjoying yourselves. Make sure to take a little time for yourself. Take those vacations, lock in those gains. Crypto Trend Trader. I'll be back with regular updates in the very near future. Have a good one. I'm out of here.